Thank you, Natalia. Dear ladies and gentlemen, I will try to be brief because the governor yesterday, I believed, gave a very comprehensive overview of the, not only monetary policy, but in general, the state of the financial system in Ukraine, macroeconomic forecast, and so on. I would first of all say that I think there is a perfect title to our section, which is very much the same as the title of the conference, but I call it not escape from post-Soviet legacy, but escape from fixed exchange rate legacy in Ukraine. I mean, I would like to say that I do not want to sound dogmatist because I am not, and there are plenty of countries in the world which are happy with fixed exchange rate regime. There are plenty of countries in the world which are happy with floating exchange rate regime. So it's whatever you want. But in case of Ukraine, I mean, looking at the past, it looks like there are real and strong arguments why fixed exchange rate served a very bad job in Ukraine. Yeah? I mean, basically, what had happened actually, that was a really false stability. And we have heard today from Mr. Miklos, who said that low gas prices was actually, and this, let's say, energy sector disparity was actually one of the reasons of so bad situation in Ukraine right now. And I believe fixed exchange rate as well was another reason for that. Because basically what we have seen the accumulated imbalances via this fixed exchange rate, this dollarization, and it ended up badly in 2009. It ended extremely badly last year, and so on. And the another reason I think why exchange rate is serving, fixed exchange rate is serving quite badly Ukraine, is that, I mean, I would say it was compatible with the economic model Ukraine had prior to the existing moment. And I would like to admit, I have already reiterated it in some public appearances, that this model is broken. That's pretty clear. There is no way Ukrainian economic model after the existing crisis would be the same as it was in the past. So if you have a new economic model, and I think the Minister of Finance just in the previous panel told a lot about how the new model and what's not the model, but what kind of changes you should do in order to change your economy. And I think the same is about exchange rate. So then the question is, if not fixed, then what? Yeah? And the answer we are currently giving in the National Bank, and which is completely in line with advice we are getting from international donors like IMF, is inflation targeting. But it's also important here, yes, that we are not targeting inflation targeting, yeah, like it was, for example, in New Zealand in 1991. Yeah, I mean, the countries are moving faster, yeah, and in general, for example, when everybody says in Ukraine that we should be like Poland now, but we should not be like Poland, what Poland was doing in 90s, yeah, so you should adjust smartly to that. And if you know, for example, inflation targeting, which was rather successful and really successful in a lot of countries, yeah, in our region, in other regions, and so on, is also changing, yeah, and the time is passing, and there are substantial modifications to this rule. On the global stage, the one big modification definitely is the issue of financial stability, which now countries, central banks has to put very much into the account when they're doing the inflation targets. And I think important issue for Ukraine definitely is exchange rate itself, because we do realize that we cannot de-anchor our exchange rate expectations in very near future, and we should still manage exchange rate to some extent, let's say exchange rate expectations for quite a substantial period of time. So I actually call it, and that's my invention, a smart inflation targeting. Yeah? So it's not full-fledged inflation targeting as in theory, but rather smart inflation targeting. Now about what we will do for that, yeah, and how we get there. I mean, it's pretty clear that we are at the start of a very, very long and windy road, yeah, and a lot of people are arguing and saying, no, Ukraine should not be prepared, is not prepared for inflation targeting, let's not do it, and so on. That I'm always answering that if you are not prepared now, and you do not start to prepare, you would not be ready in 3 years down the road as well. So it's better to start now, to lay up all those preconditions, and kind of gradually move to it, yeah. I mean, if you look at other countries, even, let's say, from our post-Soviet mentality, like Moldova and Georgia, I mean, to some extent they were able to introduce it. And Russia, for example, is quite successfully moving to that regime as well until last year. So basically, apart from that, before saying a little bit how we'll move to inflation targeting, I think definitely, yes, we are at the start of this road, a very difficult one, but we are also in very turbulent time right now. Basically, we are not kind of strategic thinkers of monetary policy now, we are more kind of firefighters. And there is definitely a kind of irony that you have now a lot of new people in the NBU. Most of them are coming from commercial sector, from background of, let's say, liberal economic policy thinking and so on. And what these people are doing, they're managing the market by their hands exactly the way as the previous manager has been doing. Yeah? I mean, believe me, nobody from this, I would say, 50 or 60 new people who are now in the BU is happy about it. At the same time, we do understand that in the short run, for the country which is facing classical triple economic crisis, financial balance of payments and growth, we are also facing substantial political shock, yeah, with 20% of our exports actually just wind down at one stage, at one moment. So yeah, we should firefight for the moment. That's an issue, and there is basically no alternative to these administrative restrictions and these capital controls. But at the same time, we do not do only that. We also start to prepare some small important things for inflation targeting. And what we did, we actually started from the internal structure on the NBU. So, because it should be the first thing, yeah? What we did, we tried to align the internal structure in the way as it normally done in the countries which have this inflation targeting regime. So we have monetary policy formulation units are now separated from market operations, from implementation units. And we now have much more, let's say, tight, close connection between economic analysis and forecasting with monetary policy formulation. I would say that the economic policy and economic analysis and forecasting was always a strong point of the NBU, thanks to the people who are in this audience, like Mr. Shumila, Mr. Nikolaichuk, and others. At the same time, they were kind of separated from the policy part. I think it's important now to bring these things together, analysis and policy. So that's kind of an internal thing. Another internal thing we have started officially in late January is the first meeting of Monetary Policy Committee, which is now going monthly, every month, and it's quite interesting exercise, I would say. Unfortunately, it's closed to the public, but I would say if you start to sell tickets for that, probably it would be sold out, yeah, because I mean it's a very interesting and important discussion. So, but I think it's kind of also a very important sign how the things are changing in the National Bank and how the process of decision making is really changing in the central bank. We also did launch the new, let's say, the product line of the National Bank. You can look at the website. For example, on Monday you would find their new, the April edition of our monthly economic report. So we decided to streamline and basically communicate with the market with regular products which appear on the NBU website regularly. So it's inflation analysis, it's economic situation analysis, it's monthly economic report, which is comprehensive, including all sectors of the economy, and the flagship publication of the central bank, which is inflation report, quarterly publication, which is explaining the situation in the economy, explaining the outlook, which, how it's seen by the National Bank, and policy rationales as well. The first issue was published in early April, and we will continue to publish on the quarterly basis. And in general, as the governor mentioned yesterday, we are now really trying to change our communication policy because we do believe it's important. And I think there was a question to the Minister of Finance on the previous panel about that and so on. It's really, really important. I mean, recently I have been talking to one of the senior central bankers from other country, and he said to me a very simple but very good advice. He said, when you're communicating to the public, the best way to ensure that people understand you is just imagine that you talk to your mom and dad. If your mom and dad understand you, then general public would understand you as well. So yeah, these are first things we are doing now, but there is still a lot to do, both within the National Bank and outside the National Bank. I mean, the normal inflation targeting mechanism would not work if you don't have a functioning financial markets. That requires a banking system cleanup. I think the governor spent yesterday a substantial amount of time talking about that, yet how much banks disappeared, that we do not regret it, yeah? And that we actually want to have a normal functioning banking system, and that's why we want to have a normal functioning money market and other segments of the local financial markets. But what I am always reiterating, coming to the end of my speech, is that inflation targeting per se, especially in emerging market economy, is not only about central bank giving a strong mandate, that's it. It's about everything in the country. Antitrust regulation, inflation calculation, and that's it, and that's it. So it's basically the regime which actually covers all aspects of economic policy making. And that's really important. I would also say at the end that yes, we do understand the situation is continuing difficult. Yes, we had some respite on the FX market recently, and the National Bank is trying now to ensure that it continues. And also we also understand that capital controls and restrictions on deposit market is not long-term solution for the economy, and we would start to change that. Of course, it's always easy to introduce restrictions. It's very difficult to understand when you should start to wipe out them. But here that I would like to reiterate that the National Bank is really committed to keeping on the one side exchange rate stability. I would not call that it's fixed exchange rate, yes, but we have seen in the last few weeks that the exchange rate is pretty flexible, yeah, and the National Bank is intervening on the both sides, trying to smooth exchange rate movements, and we are really committed to slow down inflation. Of course, with inflation of 46% right now, it's difficult to say that we are targeting inflation and so on, but we do sure that there are forces which will bring inflation down, and one of the most important forces is our policy efforts. The National Bank, the Ministry of Finance, and so on. I think Monday is a quite landmark day as well in Ukrainian history, as we have a first meeting of Financial Stability Board. So the intergovernmental body which unites, which you have present the top officials from all financial regulators like Ministry of Finance and National Bank, State Securities Commission, Deposit Insurance Fund, and non-bank financial regulator. And that's exactly the platform where we discuss the main issues related to the financial stability and so on. And we do consider this platform as a very important going forward regarding all these aspects related to the financial sector stability and coordination. Thank you.
Thank you very much. Thank you, Dmytro. Your speech sounds promising despite all. And another very painful issue for Ukraine is sharp hryvnia devaluation. To smooth this, National Bank introduced some capital controls and so on. The next question we are going to address is how long should capital controls be in place, and should the central bank manage the exchange rate float? I would like to welcome Yuri Gorodnichenko.
Thanks very much for having me. I'm an academic, and I'll tend to present a more theoretical perspective on these issues. The head of the NBU yesterday and Dmitry today reiterated that the NBU, the Central Bank of Ukraine, is committed to having inflation targeting, if not now, then in the near future, also to have a flexible exchange rate. I think it's a terrific idea. I totally support this. I think it should be done. It should have been done a long time ago. And to appreciate the importance of this change in policy, you just need to look at the macroeconomic history of Ukraine. We had hryvnia since, 1996? And until very recently, we always had a fixed exchange rate with, short intermissions. And over the course of roughly 20 years, we had four big crises, four major devaluations. And every time it was a banking crisis, a balance of payment crisis, a currency crisis, all sorts of crises. It's extremely unstable environment to have a fixed exchange rate given the structure of exports and imports in Ukraine, given the stance of fiscal policy, given all sorts of political and economic risks you have in the country. So on the one hand, it's clear that we had a very volatile macroeconomic history, and as Dmitry said, what's the alternative? And one attractive alternative is to have a flexible exchange rate, is to have inflation targeting. And to appreciate the significance, the benefit of this regime, I think it's very useful just to look at our neighbors. For example, Poland, they started to have inflation targeting in '99. We look at the experience of Poland during the Great Recession. They barely had a recession. They basically just had a slowdown of GDP growth rate, but they had stable inflation. There was no major contraction. You look at Ukraine, we had a collapse of GDP by 15%. It was a major panic. Valery Gontarev said yesterday that even now, the banks are still recovering from that major crisis, right? The banking system was not quite cleaned up, and this was like many, many years later after the crisis. So, you look at Polish experience and you realize there is a lot to gain from this new policy perspective. If you don't like Poland, you can look at other countries. For example, you can say Poland is not a good example because it doesn't depend on commodity prices. It has a much more diversified structure of exports and imports. It doesn't depend on Russia as much as Ukraine. You can look at other countries which have an export structure dependent on commodity prices. You can look at Canada, you can look at New Zealand, you can look at Norway, you can look at Chile. You can have countries with all sorts of development stages, right? Develop, less develop, developing. Again, you look at the experience of these countries over the course of the Great Recession, they did reasonably well. There was a boom in commodity prices. The exchange rate of these countries appreciated. It was a cooling effect on the macroeconomy. They had the balanced current account. You look at the experience of Ukraine, you had a major boom, a credit boom, then a major bust. You have a lot of volatility for really no good reason. You can avoid all of this stuff, And again, you look at these countries of the Great Recession, they had very stable inflation, 2%, 3%, 0%, but nowhere near 45%. Right, so it's hard to escape thinking that there is a lot to be gained from changing this regime, and I think it's great that the NBU has decided to switch the regime. I think there is a lot to be gained. Everybody will benefit. Macroeconomic stability, stabilization is essential for sustainable, robust macroeconomic growth. If you don't have that, nothing is going to happen. And I think Ukraine has all fundamentals to grow really, really fast. You just need to create conditions. And one of these conditions is, an understandable monetary policy with clear objectives. If it's not going to happen now, the very thought that it may happen in the near future should be stabilizing force. Thank you.
One brief question to Yuri. You probably observed the changes that are happening in National Bank of Ukraine. As a short comment, what do you think? Is Ukraine on the right way?
I think so. Yeah, on the way out, or no. I think the central bank is doing, a very good job given the current conditions. It's extremely challenging. You have all sorts of constraints. You have, fiscal issues. You have to help the government in, a variety of ways. You have problems in the banking system. You have little reserves. You have all sorts of challenges, and it's very hard to deliver everything in one time. But the very fact that people like Dmitry are already in the administration at the top of the central bank is a very encouraging sign.
Now I would like to announce the speech of Alexei Kravtsov, who represents Bank of Canada, one of the successful inflation targeters. And the question we are going to address is how to stabilize inflation and what is optimal inflation rate to target.
Thank you very much. First of all, very, very pleased and happy to be here. So thank you to organizers. And on a personal level, I'm happy to help with doing what I do and contribute to this event and contribute to my country. Secondly, I need to provide a usual disclaimer for as an employee of the Bank of Canada, the views expressed here are only mine and do not necessarily reflect the views of the Bank of Canada. So I will talk about basically how to achieve price stability and sort of what price stability means and why it's useful. So when I say price stability, I mean one way to say it in a sort of simple way is that it means slow, stable, and predictable inflation. So there's voluminous literature out there that argues quite convincingly that price stability is associated with efficient allocation of resources in the country. So it gives a chance to households, firms, investors plan ahead and make the decision in a ways that makes them most productive. Okay, so on the other hand, we have a central bank that has significant control, or quite a bit of control, over inflation, at least in the medium and long run. Okay, so at the same time, please remember that central bank pretty much has one policy instrument, at least in normal times. Okay, so if we take these two points here together, then it looks like price stability should be one of the main objectives, if not the main objective of the central bank. In fact, the bottom line of most of the literature in central monetary policy theory says that price stability is pretty much the best thing that the central bank can do for the economy. Okay. All right. So how do we achieve price stability? If you look at how monetary policy affects economic decisions, there's many channels, but in a nutshell, we have to remember that economic decisions are associated with some kind of nominal return, okay? So it's a return, but it's in terms of money. So the nominal return then is a sum of real return, which is the policy usually, monetary policy usually does not have a direct control over, plus expectation or outlook over what inflation will be, okay? So then the central bank, therefore, can affect the real return indirectly through managing inflation expectations. Okay, and the business, the activity of central banking nowadays is to a large extent is a business of managing inflation expectations in the economy. Okay, so how to do that? In order to do that, monetary policy needs to not only decide on what level of the interest rate should be today, but also it needs to plan for all the future path of nominal interest rates in the economy. And this is very, very hard to do. Why? Because economic conditions at any point of time are varying quite a lot, especially in the transition economy, emerging economy. So there's always a constant flow of economic data that the central bank needs to understand. It needs to understand the data and form and assess sort of what are the underlying conditions that lead to these constantly changing variables in the economy, assess the risks, and in addition to that, it needs to explain to households, firms, and investors out there what those risks mean for the economy and how the policy actions that the central bank will take will help the economy to maintain stable prices. So how can the central bank deliver this communication of the whole path of future nominal interest rate? One answer is that it can adopt a certain monetary policy framework based on a so-called nominal anchor. And I'll give an example of inflation targeting, since it makes sense since I'm from the Bank of Canada and we target inflation. So what's inflation targeting? Inflation targeting is an announcement of a nominal, targeting a path of a nominal anchor, inflation in this case. And it's, as previous speakers mentioned, it's been very popular, adopted by many central banks around the world, and it seemed to have been successful, certainly in Canada. There's a website, Central Bank News, that gives a list of countries that adopted inflation targeting. I counted 56 of them there. I think we have to be a little bit careful of whether that's actually too generous to ascribe the inflation targeting to a particular country. For example, Ukraine is on that list, saying that Ukraine's inflation target are targeting 9% inflation by the end of 2015. So I would be careful looking at that list. But nevertheless, there's a number of countries who adopted inflation targeting, and they're very different. Right? There's developed countries, there's also developing countries and emerging countries. Right? So the BRIC countries are there: Brazil, Russia, India, China, South Africa. There's Eastern European countries: Poland, Romania, Hungary, and there's a variety of how inflation targeting is implemented there. Different levels of targets, different ranges. You can let me know, I'll tell you where you can find that information. Okay, so in theory, inflation targeting ranks quite highly as a monetary policy framework, and there's two fundamental reasons for that. The first one is that it links, it connects the path of current and future nominal interest rates to just performance of one nominal anchor, inflation, that is very well observed and understood. Okay, so that's very convenient, right? Because if there's deviations of inflation from the target at any point of time because of some kind of shocks, the understanding from decision makers out there, households, firms, and investors, is that from then on, the central bank will choose the path of nominal interest rates so that to return inflation back to target within some period of time. Okay, so this is a very, very convenient way of formulating and conveying to the public the path of nominal interest rate. Okay. Now, this arrangement provides a very easy way to judge whether or not central bank is doing its job, right? You just need to see where the inflation is relative to the target. So it provides a mechanism for transparency. At the same time, it holds the bank accountable, and this feature is especially useful in economies with weaker institutions. Okay, so if institutions are weaker and they can jeopardize sort of the performance of a central bank, when the central bank comes out there and says, well, no matter what, we'll try to hit the target, it helps count the bank accountable. So that's the first feature. The second feature is kind of opposite to that, right? So the reason why inflation targeting is successful is because of the balance of the two things. So the first feature is kind of to tie the hands, so to speak, to try to hit the target, okay? But the second one is to do it in a way that still leaves quite a bit of flexibility for the central bank to react and mitigate the effects of other macroeconomic circumstances that are important for the well-being of the economy. Examples are of these different circumstances is the shocks that sort of push inflation up or down can be sometimes larger, sometimes smaller, sometimes they can persist for a while. There could be other considerations like imbalances in the financial system, and maybe households take on too much debt. There could be external shocks to the terms of trade, which is very, very pertinent for open economy like Ukraine. So it's the combination of these two things that makes inflation targeting out there quite appealing for central bankers to have. It ties the hands, but leaves quite a bit of room for flexibility. Okay, so. There's a few features, in terms of implementing inflation targeting, there's a number of things that a bank needs to agree on. They need to choose sort of what measure to use to target, CPI inflation, core, consumption price index, what should be the level of the target, should it be within some kind of range, and if the inflation deviates from the target, how long it would take for the central bank to return it back to target. And of course, communication, how to communicate is an important dimension there. Now, the point here is that there's many ways to how to choose these parameters, and many of them work, okay? So I will not spend time now, given lack of time, sort of discussing all of them. They're very important, but they can work. One thing, and that's well I end my discussion with, is that one feature that must be present for all inflation targeters is that the monetary policy on inflation targeting needs to be credible. Okay, and this point applies to countries that are about to adopt or adopting inflation targeting, as well as those that hope to sustain inflation targeting over time. So what's credibility of monetary policy on the inflation targeting? Basically, why does it arise? First of all, it arises because, as I said, in today's environment, there's the shocks that drive inflation up and down. So it's impossible to always hit the target at any point of time, right? Inflation always will deviate. Moreover, if I'm a central bank and inflation deviates, I need to take action to bring it back to target. It takes time, right? There's a lag between my action and the return inflation back to target. So in between, while inflation is still not on target, I need to be able to explain to the public in a way that they trust that eventually inflation will be back to target. This is important because when they incorporate this information in their decisions, the current performance of the economy and the way it responds to my action will be more stabilizing. Okay, and I'll conclude with a list of things that are important for a monetary policy, for a central bank to have to gain credibility. And those are the usual suspects that you probably already heard, and some of them have already been mentioned. One is that there needs to be a clear communication strategy by the central bank, and it involves a number of things like there should be sort of regular inflation report, the speeches by top officials. Dissemination of economic knowledge is very important, so this research should be conducted and disseminated via events like this one, and so on. The second one is that there should be institutions in place that ensure central bank independence. Legislative, such as making sure that the decision makers at the central bank are protected from all sorts of sources of pressure on them in making policy, and then it's understood that they have exclusive control over what monetary policy is. Another form of independence is that there should be a clear mandate of what is the objective of the central bank. And that's important because, and we talked about exchange rate volatility, so if there's excessive exchange rate volatility, there might be desire or pressure for the central bank to react to that. But then the question is, what about price stability? It's impossible to really successfully target both, right? So if there is a clear mandate that price stability is first, then it will help people understand that the central bank cannot accommodate stabilizing everything, right? Remember, there's only one instrument there. And two last things is, inflation targeting is not something that is done in isolation. It's really a package deal that applies to the government altogether. And that's why when a country adopts inflation targeting, there's either implicit or explicit contract between the central bank and the government. In fact, in Canada, every 5 years, the central bank and the Minister of Finance, they sign a contract saying, from now on, for the next 5 years, the Bank of Canada will maintain inflation target at 2% per year and so on. Okay? Finally, reputation is very important. Just like Gerard said in his speech regarding democracy, very similar point applies to inflation targeting. Demonstrating that central bank is capable to deliver on its promise from time after time after time and building momentum helps create more trust, more credibility to what monetary policy is doing. Thank you.
Thank you, Alexei. So following your comment that Ukraine is already on the list of inflation targeters, I would like to ask any one of the participants who wants to comment this question. How much time can it take for countries like for Ukraine to implement fully functioning inflation targeting? And what is appropriate inflation rate to target? As far as I understood, it is 4-6% of annual inflation, as I read in one of the interviews.
And first, I mean, that's, as I said, inflation targeting is actually a moving target, right? It's difficult to say exactly in which moment you are in inflation targeting. So yesterday you went to bed and you are not in inflation targeting, and you wake up in the morning you are in inflation target, right? So it's a different thing. But I mean, I would say, assuming we gradually step out of economic crisis this year and we continue all these preparations, not only on the side of the National Bank, but as I reiterated in the comment, was also confirmed by Alexei. So I think it would take us 2-3 years to really introduce the elements of the inflation targeting. But as I said, it doesn't mean that we will definitely go to the full-fledged inflation targeting New Zealand 1991 style, right? Regarding optimal inflation rate, that's what was already communicated by the National Bank. In fact, was written in monetary policy guidelines that most of the countries, and that's like in line with most of the countries, that we are targeting inflation of 5 ±1%. Yeah. I mean, of course, we do understand that as a target, let's say, in a midterm perspective, so from 3 to 5. But actually, if you look at the examples of other countries, there are examples of the countries which achieved disinflation quite fast when they really started to go that way. So there is nothing really difficult about that if you are committed about that. But it's also clear, we know that the structure of Ukrainian economy is changing, the model is changing, as I have said, and so on. So that's all kind of complications that might be there and so on. But at the same time, if you're not making an ambitious goal, there is no worth trying. That's also clear as well.
Now let's move from macro issues to banking crisis, and I'm glad to introduce the speech of Vladimir Lavrenchuk, who will talk about how to deal with non-performing loans.
Thank you. Very good afternoon. If you allow me, I will make 1-minute introduction, and next we'll respond to the issue I am offered to speak, and a few minutes for proposition. And my introduction will be based on my previous speech in the previous conference this morning. Sorry, it wasn't related to banking, but to new paradigm of the world and Ukraine role in it, and what is the difference. So I was among speakers, and I'm thinking now how to jump from one audience to another one. And I found it very pragmatic. What is paradigm? It's a set of rules, set of laws that are based on what people believe in. So believeness is a ground of rules and laws, not opposite. What we believe works. What we don't believe doesn't work. Doesn't matter what rules we will set. That's introduction. Now NPL, when I read the name of the message I should share with you, how to deal with non-performing loans in Ukraine, I would say with old paradigm in Ukraine, which was based on corruption, unpredictable court solutions, populistic political leadership based on success factor for those who are close related to governors. There is nothing to do with NPL in Ukraine. Our experience for last 5 years after 2008 crisis of collection of non-performing loans is very poor. So by international accounting standards, before 2014 crisis, the level of NPL we counted at the level of 30% each next year in a row. Nothing been improved because of the paradigm we live in. So if nothing been changed, nothing to do, we will have even worse results based on new factors we have in Ukraine. The question is, are we living in new paradigm? And my answer is yes. There is zero tolerance to corruption, not only on the stage of speakers, but being a member of number of associations, I guess you agree with me. There is zero tolerance for any sign of corruption. There is a willingness to get another result from the courts, from the prosecutors. There is a zero tolerance for friendly, selective companies who get benefits out of from the not equal competition. So paradigm is different. We are living in another paradigm, and we should expect another results of dealing with NPL. And if we look to have another results to dealing with NPL, we should not base our focus on the previous results, which were very poor and named, right? I could now remind the latest statistics, which is on local standards, 21% of total book. This is the level of NPL, and by expert opinion, at the level of 50% NPL to total loan book. So big, not as big as could be. I would say the behaviors of clients are much, much better in 2013-14 compared with 2008. And that's because we are in a new paradigm with a much more better responsibility and commitment for many of clients who even have business in east of Ukraine and in Crimea. So I confirm by big number of examples, the behaviors of clients are much, much better. Still, there is a big crisis, and its impact is material. Its negative impact is material. So looking on the solutions we look now, and I now challenge the central bank governors and many who are involved in this decision, how to deal with NPL. You take a look on the collection results on existing business plan or existing challenges in the agenda of the market. It's not adequate to the current paradigm. So the collection of deposit insurance fund, or deposit guarantee fund, how we call it, is at the level of non-collateralized loans, 5-7%. So what could we expect from this fund, or from all of us, if number of failed banks is being increased? We look for the budget. To Mrs. Yaresko, please give us money to compensate the loss. And this is the biggest challenge, I think, to rethink and to rebuild the strategy. So solutions, in my mind, are not in the area of how to get funding to compensate loss, but solution is how to get money back. And I think, which is quite often not a subject of discussion, and it's not only for central bank, it's for the whole community. Look, 5-7% of collection is totally unacceptable and not adequate what we believe in. Because our belief that should be more. Our belief that budget doesn't have such money, and we pay taxes not to compensate these big amounts. And that should move us to set new rules and new laws, how to secure the responsibility and commitment of those who were involved in this failure. So I don't say about personal responsibility, which is already important. I talk about responsibilities by assets, which should be paid back. And this our success is based on what we believe in and what we believe and what we don't believe. So how to deal with non-performing loans, if you ask me, that nationalization of failed bank will not improve collection, which will be based on former set of rules and set of behaviors. The setting of bad loan institution, we call it bad bank or special unit, that many dreamers say, okay, we will build a bank, he will collect all bad loans on his balance sheet, and next we'll come to the budget, give us money. Is it solution? No, that's not solution. Solution what we believe in. We don't believe this institution will contribute for collection of money. So this is my main statement of my thoughts when I was invited to talk about how to deal with non-performing loans, and I would propose those who are involved in a decision making to think about what we believe in. Assets do exist, assets should be paid back, and should be the main source of compensate the depositors' money. Do we have good experience in the market? Yes, we do. Not only us. I present Raiffeisen Bank Aval here, but other banks as well have this or that area of improvement. I will share with you one of the case we have with the foreign currency loans. I guess many of you know this. It becomes quite political, much more than financial issue, that thousands of people demand special laws, special rules to introduce this or that rate. Yeah, that's one of the very good example on what we believe in and what we don't believe in. So we don't believe that it can work because it is very selectively, only for those who didn't serve their loans. And those who served their loans, they paid on the current market rate, and they served. Or they agreed with the bank on prolongation, restructuring, they convert into hryvnia, and that's not about single cases. Please pay attention, 75% of borrowers of Raiffeisen Bank Aval agreed on conversion based on privileged forex rate and convert into hryvnia their loans and serve them successfully. Do we need a rule? Do we need a law? No, we follow what we believe in. We believed that these loans will not be served in foreign currency because of the current rate and current income of the clients. So, but that's that's not only the very unique example. I know other banks that are following in different areas, different solutions based on common sense, believeness, fair play or fair game, how we call it, fair rules, and cooperation. And I think this is what should be based ground on making rules, sets, solutions for this number of growing challenges that central bank faces because of this outcome of the crisis for many institutions in Ukraine. And I guess my advice could be taken into account. Thank you.
Thank you very much for the proposed solutions and interesting case. And now I would like to give floor to Alexander Zholudь, who will also discuss the issue related to banking system, how to limit negative effects of banking system cleaning on economic agents.
Hello, dear colleagues. Actually, the question is greater. That in reality, if we look at what we are talking about in monetary policy, in banking sector, we are almost always limit ourselves with the sector because we assume that the sector is the main idea and we should have a main issue here, and the larger economy for which this banking sector exists is secondary. For example, we are talking about inflation targeting today quite a lot, and I fully agree that Ukraine needs inflation targeting, but it should be adequately transferred to public why we need it. We should say that for the last decade, or for example, for the last decade, we have average inflation over 10% per year with fixed exchange rate and several sharp devaluations. Since the introduction of hryvnia, we had inflation something about 11% per year, and this is also despite the fact that, as it was said, stabilization can be very fast. We can look at the situation in during the introduction of hryvnia in 1990s. There was a recession. Ukraine was falling in terms of real GDP since the breakdown of the Soviet Union, and it was the sixth year of recession in line. And the recession was quite sharp. It was, for example, 20% drop in 1994. So it was not an easy time. But when people were believing in hryvnia, we already dropped the inflation from 35% in year 1996 when hryvnia was introduced to just 7.6% in 1997. And in the first half of 1998, we had inflation which was roughly in line with what we had in 1997. But then there was the August crisis, and August crisis, it wasn't caused by the central bank and its policy. It was caused by the central government and the creation of debt pyramid, which means that the national bank alone is not able to sustain the inflation if other agents, other authorities are not working in line with it. So actually, Ukraine has an experience of successful and quite sharp disinflation, and it all belongs on trust. And the question of trust is the question of real economy more than the banking sector. Because the banking sector, we have something like Parkinson law, when every official wants to multiply subordinates, and every official wants to work with each other and not with the problem in hand. Such as the banking system. Banking system in the cardiovascular system of the economy. And what we have now is a severely hit body of economy. It is bleeding. Of course, some hits were introduced by external forces like war. Some hits were introduced by ourselves, like fixed exchange rate. And it is bad that the situation is such, but the consequences are very important. And right now the question is that a population should become believers in new government, new system, in new central bank. Right now, most problems which are in the media on the issue of central bank and on the issue of banking system are not the main points. For example, there are still questions about exchange rate, while the actual problem should be the inflation targeting. We have a lot of talk about the question of personal loans in hard currency, but actually if you look at the situation, these personal loans in hard currency are only 6% of total loans to the economy at the moment. So the rest are over 94%, and we should be worrying about them as well. Even if you look at the businesses have 8% of loans in hard currency, and quite often they have also great problems, especially if this business is import-oriented business, which assumes that Ukrainian domestic growth will be continuing, and that Ukraine will be able to generate profits for them to, for example, work on their important modernized equipment and to produce some items. And actually, the question even more segregated in terms of, for example, banks, because banks are owing to the foreign lenders 22% of their assets. Actually, it's several times larger than the question of loans to population or even to business. Another important question is a question of entrepreneurs and their linkage and their relations with the banking system, namely two issues, lending from banks and servicing of accounts. And right now, I assume that not lending, but servicing of accounts is more important, because right now what I have from the anecdotal evidence, I don't claim that this is general situation situation, but this is a situation from several sectors and from several entrepreneurs. They have a problem that sometimes their current account are not able to transfer funds immediately, and even if they receive their funds, they have to postpone the deals and so on. So what they are doing in this situation, they see that the bank with which they worked for a decade or more is not able to service their accounts, so they withdraw the cash. They assume that in hryvnia to keep this money it's not advisable, so they go on the interbank market, or more exactly on the black foreign exchange market, and they purchase US dollars or some other currency, because in Ukraine there is no real currency substitution. It's substitution of assets, and foreign currency is the main assets which is not calling for some storage, which are not degrading with time and so on. So people prefer it, and therefore we have a shift in general idea of the velocity of money, because from before we understand that velocity of money it depends on what people believe in. Once again, if we take our previous data and just extrapolate it for today, we see that even small changes in money supply right now can have much greater effect on economy, because people don't believe in hryvnia. They try to get away from hryvnia as fast as possible, so they drop it. So velocity of money increased as well as money supply increased. So even with such small money supply increases as, for example, last year, if you compare the year 2013 and 2014, actually money supply increase was more or less in line with, despite the fact that in 2013 was something like zero inflation, and 2014 we have 24% inflation year to year, December to December. But actually money supply increased not that much, and the main increase is in the velocity of money, because people don't believe in hryvnia. And what should be done is that businesses, first of all, entrepreneurs should be believing in hryvnia and believing in banking sector, because if they withdraw money, they won't work with their cash. They prefer to keep it this cash and keep it till the recession is over. But the recession will be not over when the entrepreneurs are not working. So we should invite entrepreneurs back to banking system. We should promote the idea that there will be stability, that their funds which are on current accounts will be available to them in any moment, that they are able to work with them and to work to make their entrepreneurship. Thanks for your attention.
Thank you, Alexander, for covering the important question of confidence. And now we can move to the questions and answers. Please, if you have a question, please introduce yourself and state to whom is your question.
Hi, my name is Devin Ackles. I'm with Case Ukraine. I would like to ask a question to Mr. Sogolu. Actually, I also have a quick comment as well, because everyone's been talking about transparency with the MBO. I guess I should start my commentary with saying there's been a lot of positive changes at the MBO and everyone's seen them. The flack you guys get from certain politicians and other things, I think can be stemmed in some ways, and I'll get to that in a minute. I think maybe it would be helpful, for example, if you could tell us in a very simple way how you plan to get to the 18.2 billion reserve mark that you have, that was published in your report on April 6th, I think, on your website, in just kind of simple public language. The second point is, on your website, you guys are now by law required to put out a monthly report of, how much finance or refinancing you're providing to banks, and you list it. Why is there no list of, just a simple list of insolvent banks for the public to see so they understand what's going on? In just one space, you guys definitely have the data. You release every single time a bank's is insolvent or there's issues. You have a public statement. It gets out to the press, but maybe it would be good for you guys to have a central site where you just say, these banks are in this state. The second point is a lot of controversy is going around certain banks getting more refinancing than others, and it's a very political issue, obviously, because, there's been some issues with, for example, Privatbank, without a doubt. The public is very suspicious, and this is an issue of confidence. Now, people who look behind the scenes understand some more of the issues, what's going on, etc. But the headline reads, this bank gets 2 billion hryvnia on financing, and one of their local banks is shutting down. People don't really understand what's going on, and it looks like it's kind of like the rules haven't changed. Things are kind of going the same way, and they're not really sure where the money's going, how it's being spent. And on top of that, no one has been prosecuted. That's not the NBU's job, obviously, but no one's been prosecuted for the number of banks that have failed, and some of them obviously failed on purpose. So if you could address the 18.2 billion, what the plan is in just very brief terms by the end of the year, and maybe what your thoughts are, or if you have plans on more transparency for your website, etc., what those plans are. Thank you.
Okay, thank you for the question. Yeah, I would say, to address in simple words about 18.2 billion, I should imagine my mom and dad right now. So actually, the answer is pretty simple. Yeah, there is a balance of payments on Ukraine. There are all these projections on current account, what will be exports and imports this year, and what kind of inflows Ukraine gets this year from IMF, from other donors, and so on. If you sum it together, and you also include there the savings Ukraine gets from external debt restructuring, you get to this number, also including there are some already operations of the central bank at the open market. Yeah, as the governor mentioned yesterday, the National Bank is coming to the market and buying currency, and that would continue. So, and at the end, it should bring us to this figure of 18.2 or 18.3 billion. That's the first answer. Regarding the list of insolvent banks. It's public information, and I think if you look at Deposit Insurance Fund website, you can find this information, which banks were under administration and so on. Of course, I agree that it would be easier to sum it up on some place and so on, to have the name of the bank and so on. And as you said about prosecution, maybe also to have a separate column of people who are prosecuted for those banks which fell and so on. And here, I just can share the point. That's pretty clear that you have 47 banks going bust, and and it's pretty clear that in some of the cases there were such issues and so on. I think, we are going to increase the level of transparency around that, not only to the public community, but to the bankers. Mr. Lavrenchuk was present at the meeting in the National Bank a few weeks ago when the National Bank presented quite comprehensively the way it would do asset diagnostic and the stress test for the banking system and so on. I don't think a lot of banks liked it, what they heard, but at least they heard it, yeah? So, and that's the way we are going forward, yeah, and that's kind of trying to improve our transparency, and definitely we are also open to all suggestions in that, so that's part of my job. I'm meeting with journalists both off record and on record also to get the sense what we are missing and so on. Thank you.
Thank you, Dmitry. Any more questions?
Okay, thanks. Good afternoon. My question originates from the fact that the Ukrainian economy is in stagflation for the second year in a row. And given this fact, more tight monetary policy could lead to a worse performance of economy and to higher unemployment. The previous governor of the Bank of Canada, Mark Carney, once mentioned that he is considering switching to a nominal GDP targeting. So my question is whether this monetary policy regime can be applicable to Ukrainian realities. So maybe Alexei Krivtsov may answer. Thank you.
Yeah, so as part of our contract with the Ministry of Finance that I mentioned, right, so every 5 years we renew it. So the bank conducts routine examination of alternatives to inflation targeting as a monetary policy framework, right? So we always set up a research program that looks at other options, despite the fact that inflation targeting have been working seemingly quite well. So it sets a high bar, but still we're being vigilant and looking at other alternatives. Some alternatives are nominal GDP targeting, but even before that, more popular on our plan was price level targeting as well. So those are different examples of setting up a monetary policy framework that would achieve objective that is more generally equal to the price stability. Okay, there are differences. Okay, differences are what I would summarize as sort of where the balance is between sort of tying your hands and sort of what to target and how closely on one hand, but also how much flexibility to leave for a central bank to make sure that other related issues related for price stability, but also overall health of the economy can be taken care of within the inflation targeting or nominal GDP targeting or price level targeting framework, right? So there are variations there, and yeah, so it would be something that is feasible, and it's up to central bank to decide what is the best alternatives. But I think that this is something that can be addressed down the road. I think the sort of the first things first, and that's what I mentioned at the end of my address was that it's important to establish some foundations for ensuring price stability in whatever form, inflation targeting or perhaps something else, and those are something that would increase the credibility of what the central bank would like to do. Okay, so I hope that answers. Thanks.
Thank you. Any more questions? Please, that part.
Thank you, Ole Havrelison. I apologize if I may be asking a question that was covered earlier. I spent a little bit of time in the other session, so you can just cut me off and say we talked about that. I have a question, and I'm not sure to whom to address it. Anyone, I think, will do. Why are we thinking about inflation targeting? There's an obvious problem right now of just having a crisis of confidence, and I think inflation targeting experiences start with, in the first sentence, that you have to already have enough credibility in order to start the program. So the technical question of how much time it takes to prepare and so forth is less important than how much more time will there take to regain confidence. And I hear so much from the floor and elsewhere about the public not having the confidence. And finally, what could inflation targeting possibly achieve that a simple, standard fiscal and monetary discipline of getting to a lower target and a lower fiscal deficit would not be able to achieve? Do we really need inflation targeting?
I can try to answer the first part and maybe a little bit of the second. I agree that it takes a lot of credibility and it takes time and courage to build credibility. One example is to look at the Volcker disinflation when the US had chronic problems with the inflation rate. It was well above 10%. Volcker tried to convince markets that he is serious about inflation. He increased interest rates a lot. People didn't believe it. He raised it even more. They didn't believe it. He raised it even more, and then people said, "Okay, he's serious." But he had to push the U.S. economy through a major recession in the early 1980s. But ever since, everybody believes that the Fed is serious, right? So if they say we're going to do it, they know they're going to do it. I hope Dmitry will not have to do it. But, it's also a function of communication. You have to be always on TV and explain in very simple terms that, look, we're going to do this, it's a new regime, if you don't believe us, you're going to suffer. And so it's in your best interest to believe us. In terms of the second question, there is a lot of theoretical research that, it's true that if you have flexibility, you don't have an inflation targeting or any type of monetary rule, in many cases you can achieve the same outcomes, but it's very tricky because, as Alexei said, by tying your hands, you actually gain more credibility, right? And, given the history of Ukraine, the macroeconomic history, it's very important to tie your hands. You just need to tie yourself to whatever you can and, stick to it. Thanks.
I provide my comment, 2 comments on your question. First one with confidence and how, when, and what could be a factor of restore the confidence. Confidence is a product we live with. No confidence, no bank. There is a confidence, there is a bank. So there are many factors that destroyed the confidence in Ukraine, more than one. But one is the uncertainty with banking institutions. And what is going now with the cleaning of banking sector, we call it, if central bank agrees with such a definition, that's exactly the direction that improves the confidence. And so the subject with no debates that the banking industry will win many out of cleaning of banking industry as soon as possible. It's done. Issue number 2 is the inflation, targeting of inflation. Targeting is important. Targeting creates expectation and predictability. The absence of targets creates uncertainty in a volatile environment, and what we are living in, we don't have targets for forex rate, or we didn't. And now targeting of inflation creates expectation. That I tell you from the market. Targeting creates expectation. Issue number 2, what to target, forex rate or inflation? I am not professor in the macroeconomy, but from the market viewpoint, the dependence of foreign currency of Ukraine creates mentality that foreign currency is forever and dominating role of this instrument is for last 20 years as a fact. What I think that will be very good for Ukraine to go far from this statement, closer to local currency culture of making business. That's not one-day event, but targeting inflation much closer to local currency business culture than targeting a forex rate that will keep the previous paradigm. Thank you.
More questions? Please.
Yeah, my question was very much in line with this discussion, and I wanted to ask a bit more from Yuri on this choice of target, because he clearly explained that an exchange rate target was not a good idea, yet the discussion was whether it was fixed exchange rate or inflation targeting. Well, there are many intermediate ways to target the exchange rate than a fixed exchange rate, and I was wondering whether targeting inflation is not something that is more likely to happen in highly mature monetary policy systems. It took years to learn. In many developed countries in the West, it came after a very long and protracted fight against inflation, and it's only after raising credibility of monetary policy sufficiently that these central banks could credibly commit to inflation targeting. So I was wondering whether there was not a sort of path to organize to reach that credibility towards ultimate inflation targeting, and within that period, it seemed that looking at the exchange rate must still make a lot of sense. So I wanted you to comment a little bit on that. I'm coming from a country, France, who learned a lot through the exchange rate monetary system, which was basically targeting the exchange rate to the Deutschmark. Of course, the target could not be kept fixed, and one of the beauty of the system, it was a fixed but adjustable exchange rate system that was adjusted many times, which is a sign of success of the system in itself. So first question is that, whether one doesn't move too fast from one target which was very inefficient, and it's true that a fixed exchange rate is a crisis waiting to happen, but to another target which is very, very demanding in terms of monetary policy and in terms of the structure of the economy. My second question is linked to that. Any target will face problems. I mean, one of the reasons, maybe, I don't know, I mean, it's a question, why there may have been successes in other countries in Central Europe, maybe that as they modernized, there was an inflow of capital. The inflow of capital pushed the exchange rate upward, and this allows us to keep the inflation target much more easily. At the same time, it can be perverse. For example, the Czech Republic, through the inflow of capital, had an overvalued real exchange rate, and it was very costly as well during some time for their exports and for the industrial development. So what I mean by that is that no target will be the ultimate silver bullet that will make domestic and foreign balance more easily to achieve. Sorry, it's a bit more technical, but I thought that the debate on choosing the target from the exchange rate to inflation should deserve a bit more discussion.
So, it's true that you have to build credibility, and it may be very costly. When Volcker did this, it was a very big recession in the US. It was extremely costly. There are other ways. For example, in the Central Bank of New Zealand, at least in the beginning, they had a contract with the central banker, which was very clear. If you don't deliver, we are firing you. So Gontareva said yesterday she's going to deliver in 2 years, 5% inflation. We can revisit this in 2 years and evaluate her performance. On a related question, you said, there is no single target that is going to solve all problems. I agree. Monetary policy is just one of the tools. You have many objectives, and you can't hit every target with just one policy tool. You have to choose your battles. And a lot of empirical research, a lot of theoretical research is showing that if you deliver stable level of prices, you can hit as many targets as you can hope for. And, there is this term called divine coincidence. When you stabilize prices, you stabilize output. I don't know if it's true in practice, but I hope it is true. Thanks.
If I may add quickly, so it may not be a convincing proof for you, but just look at that experience, for example, of Chile, provides examples that goes against two of your caveats. First, they were actually pretty quick to kind of go with inflation targeting, starting with actually a pretty high level of 20% in 91. I mean, it took them the whole decade to go down to something close to 3%, but it's just one example that for them, if you do it right, so they kind of phased it in, starting from 20% with sort of soft targets, giving them kind of more leeway to kind of deviate and build up confidence within what they explain was a sort of path of inflation targeting. This is just one example that it can be done. And the second one, in 98, even though they were, in 95, what was that? Yeah, in 95, when they were targeting inflation, there was a negative terms of trade shock, and if they continued with the spirit of inflation target, they should have depreciated their currency. Instead, they tried to kind of keep in a spirit of fixing exchange rate. Right? They actually appreciated it, and guess what happened? Prices fell, and they went through the recession. So they reverted it, and they actually ended up depreciating the currency. So, example of one country, two episodes, kind of providing kind of a different perspective on some of the things you had in mind.
Any more questions? This would be the last. No questions?
Oleg Zanitko, Zhidlo firm. I've got actually a remark which I would like Alexander probably to respond, because within building credibility, I was looking at the experience of other countries who created the exchange boards, sort of equivalent to the Financial Stability Council, and there were real sector involved. So do you think there is an evidence that Ukraine should go this way and include the real sector representatives in that kind of platform for discussion and having just another communication channel with the policymakers? Thank you.
I guess this is true. The more policy channels, the better. However, it will be very hard to decide whom to add, because right now, of course, who are the main big shots? The oligarchs, quite often with not very clear reputation, and if they will be on the board, it is questionable whether there will be greater transparency and greater belief in them. And it is extremely important to have a transparent mechanism to select such a committee from the real sector.
I would also add that I have talked to a few central bankers in which countries, from the countries where they had representatives, for example, of Ministry of Economy, of Parliament, Financial Stability Board, and all of them said to me, it's a mess. If you have people politically affiliated in that council, it's becoming a mess. So it's better not to do it. And I'm really grateful to the World Bank, who really advised us a lot on the creation of the Financial Stability Board, and who really pushed through this document in the way that there are only professionals of financial sector supervision who are there.
So, dear participants, thank you for fruitful discussion. I think it was very interesting. Thank you.